Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
LME 3-month nickel. 9 weeks ago I lodged the idea of there being a large bump and run reversal pattern stretching from July last year until May this year, in both your own and my mind. This was a transformation from an earlier descending scallop pattern formed over the same period. I asked you to bear this in mind just in case for future use, as it was a pretty large pattern. However, this large pattern has since morphed again back into a descending scallop pattern, especially in recent days. Looking closer at more recent action, we had originally an early February to late March bullish Andrews pitchfork that showed the bullish angle of attack on the market until the middle of May, when the market breached the upper tine. The breach was repaired, but in doing so, prices swung around 180 degrees and headed lower, pushing down through the lower tine 8 weeks ago, carrying on down within a steep bear channel until the start of July, when prices hit the June 2021 low at 17,095. I said 6 weeks ago, and I quote, "This bear channel will dictate the market for the immediate future until it is broken or until the bear channel morphs into something else," end of quote. 4 weeks ago, the morphs into something else happened, with the market sidling sideways out of the bear channel and in the process forming a potential bearish halfway hesitation that last week became a reality. Now, if we look at the formation of the V-top with a pipe top at its apex formed over May and the subsequent moves lower, we can see this whole V-top action from even February to date was not just a simple V-top, but a V-top with an extension. In these types of V-tops, after the peak, the market starts moving lower, but then forms a hesitation or congestion of some form, usually a pennant or a bear flag type pattern on the way lower. This hesitation happened here over late June until early to middle July, and could be regarded, as I said 5 weeks ago, and I quote, "a hiccup in the road lower." And with this in mind, and other factors to consider, is that if we do see prices move down in the 17,100 to 15,845 zone, then the big pattern idea of the one of a descending scallop pattern morphing into a bump and run reversal pattern with some large upside potentials, well, that pattern idea may be morphing further back into a descending scallop pattern, but with some significant bearish potentials. Watch this space. And that's the end of the quote. This is where we are now, moving lower, corralled, unlike some other metal markets, not by a bearish Andrews or shift pitchfork, but by a simple late May to date downtrend, currently at 15,735, at least until yesterday, when the downtrend was breached. This downtrend is the one to watch on any sudden strikes higher. Meanwhile, on the downside, we have the very significant lows of late November 2023 and January and February 2024 in the 15,840 zone. And we have to watch those on the downside, which is where we have seen the market seemingly halt and pierce the downtrend. Now, assuming we didn't take this downtrend piercing too much into account, well, then the late May to date big bearish halfway hesitation would have potential down to the 13,750 zone, which is quite a way away. It is this point that I feel obliged to mention once again the big descending scallop pattern and what it may mean within the near-term universe. So, the key level, as already mentioned, are the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it. A significant break below that level would give a potential for the descending scallop pattern on the downside down in the 13,830 zone, which is not too far away from the potential below for the bearish halfway hesitation. Thus, it all comes down to what the market does now that it's reached the 15,840 zone. LME 3-month zinc. The mid-April to end of May ascending wedge pattern drove this market higher up as far as the neckline of the September to December 2022 reverse head and shoulder pattern, where it peaked for horn top in late May. This actually turned out to be a false break higher as prices moved back down, rejected by the neckline. The market subsequently reached the primary and secondary targets for the on top, but the decline became hesitant in mid-June, especially when it reached down to the interesting support, currently at 2800 of the broken upper time, highlighted in dark blue, of the old May to August 2023 bullish shift pitchfork. And that had acted back then when it was working as an August 2023 to April 2024 upper bear channel line. I said 7 weeks ago, and I quote, "This is the first decent support we have seen, though I would not be surprised if prices do move further down near the middle time, currently at 26.35, end of quote. My initial reasoning for this was an early June based bear channel, and I said at the time, and I quote, "This bear channel is running the market at this moment, at this time, and until it breaks or morphs into another pattern, it will continue to do so," end of quote. Well, 7 weeks ago, prices broke out of this bear channel, or rather prices wandered out of the bear channel and stood around just like cattle that had broken out of a field and now look dumbfounded. In the end, prices rose in late June, peaking in early July, just over the big old 50% Fibonacci line for the 2008-2022 move at 29.65. I said 6 weeks ago about this move higher that, and I quote, "But we can look as also a possible form of a HiFi hesitation in a potentially much larger move lower. We'll have to see how this develops, and I'm sure it will have caused a move, or at least caused another change, another morphing into another pattern by then," end of quote. Since then, the market has undergone a number of changes, turning lower and indeed becoming a bearish HiFi hesitation pattern, though it is such an ugly looking pattern with potential down in the 2630 zone, reached oddly enough today. However, all this has given me the opportunity to draw a new late May, early July bearish shift pitchfork, highlighted in bright red on my daily chart. For the moment, this is the pattern showing the driving bearish angle of attack of the market, though I have to admit this is quite a wide pattern. Right now, prices are between the overhead upper time, currently at 27.94, and the middle time below, currently at 25.22. Back to late last week, and we saw action carrying on this week as prices have come down, testing the gold highlighted long moving average. That's currently at 26.53. The previously outlined dark blue middle time, that's also been tested, and the March 2021 low at 26.27, all three have been tested. Looking down now at 26.01, where we next have some support, and this becomes perhaps more interesting. This is a gateway to all the congestion we saw last year that stretches down to at least the 23.97 level. Finally, to top all of this off, this market is set up now with just a day to go until the end of July. So over July become a monthly key reversal. Thus, if we close on Wednesday, the 31st of July, either over 29.85 or under 29.41, then we're beyond. Well, right now we are most definitely looking at July as being a monthly key reversal down. LME 3-month tin. Over April and May, we saw the market form a double top, Adam and Eve type. However, despite this pattern, the market was not finished with its creation of patterns, with prices attempting to drop down through the 50% Fibonacci line of the March 2020 to March 22 move at 31.845, as well as the neckline. However, all these supports together caused a reversion back up. But by the middle of the second week of July, the reversion had also failed, and prices dropped down, back to where we had previously been. This failure to try for targets below for the small, narrow head and shoulders top back in April, and then the double top pattern, Adam and Eve type, eventually led to another pattern, an April to July triple top. It also clarified the April to July sideways triangle highlighted in purple on my daily chart, which had a first false break on the top side, but then a proper break lower. And that was late 2 weeks ago. I said as much 5 weeks ago, and I quote, "As a result of all this, a new larger pattern emerged last week," so that's now 6 weeks ago. A late April to date sideways triangle highlighted in purple on my daily chart. This pattern is much like the double top, still not complete, having only 2 touches per side, but it has potential. So I could see it working together with the double top idea, or maybe not working with it and making something else. Either way, keep a close eye on the purple lower uptrend, currently at 32,295, as it could also be seen as the neckline for the whole double top idea. End of quote. Thus, if we were to follow up on these ideas, we would see a primary target on the downside for the purple sideways triangle in the 29,970 zone. The target's already been achieved. And the secondary hard to reach target X down in the 26,260 zone. Meanwhile, the triple top idea would see a primary target down in the 30,100 zone. The target's already been achieved. And a secondary harder to achieve target X1 down in the 28,070 zone. Now, what we have in the way is the congestion between 28,835 and 29,05, containing the July 2011 high at 29,05, plus the slowly rising gold highlighted long moving average nearby at 28,340. And the neckline extension of the October 23 to January 24 reverse head and shoulders bottom, currently at 27,655. And finally, the 50% Fibonacci line of the March 2023 to April 2024 move at 27,330. To be honest, I'm not sure which of these is best, but the lower prices go, the greater will be the support. As of today, we have already tested the congestion between 28,835 to 29,005. And right now, we are testing the gold highlighted long moving average, if only just. I'll only add 2 final points. I've drawn a mid-April to mid-July bearish Andrews pitchfork as a just-in-case scenario. The market is just below the middle time right now, which is currently at 29,130. And I'm quite prepared to morph this bearish Andrews pitchfork into a shallower bearish shift pitchfork, or retire it completely. My final point is that we are set up to make July potentially a monthly key reversal. Thus, if we close tomorrow, Wednesday the 31st, either over 32,820 or below 32,610, then we'll be on. Right now, we are most definitely looking at a monthly key reversal down.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.